Hello, everybody. Thank you for tuning in to this week's Sector Spider review. You may hear that chirping sound in the background and might sound like a bird, but believe it or not, that's one of our guinea pigs. That's Whiskers. So people have been following me for a while know that I always used to sit with Fat Porky sometimes when we would do our, go through this. And unfortunately, Fat Porky has passed on, and he's in the great guinea pig pasture in the sky. But anyway, I don't even know why I'm bringing it up. I just wanted you to know what that sound is. So anyway, the market has had a big move. It's actually had a historic move. You'll remember that in December we pointed out how that was after that sell-off on Christmas Eve. It's the most the S&Ps have been oversold in, gosh, like 7 or 8 years. So obviously we rallied, but now we're approaching some resistance and we're overbought. So I expect to see some consolidation. And one thing I'd like to note is that I don't remember, and of course it's not scientific, this is just my memory. I don't recall a time or one of these previews where every single sector was going up. Usually one of them's going down or whatever, one of them was leading it, the other ones are going down. But you'll see as we go through this, some are consolidating a little, but you can argue that every sector that we're going to look at is in an uptrend. So I'm starting to think that maybe that could be bearish because that could be a contrary indicator. So we'll see that when we get to it. So we all know that in financial markets, there are certain price levels that are more significant or important than others, just with regards to the amount of supply and demand that exists at them. And you don't need to be a chart guru to know that. You just need to look at a chart. And also, prices are always doing one of three things. They're either going up, going down, or staying the same. So if you can understand this, it could definitely help you make money and improve your trading strategies. Forget about all this garbage like harmonic charts and Gann theory. Well, I'm not saying forget about it because it is interesting to read. Okay, it's like Bigfoot and UFOs. It's fun to talk about, but it's really not credible. And it's amazing how people still follow Gann, and because that's one of those esoteric things. I actually did a big study on Gann, and I actually read all his books. And I would be willing to say his books were written in the 20s and 30s. If Gann was alive today, he wouldn't even realize what a Gann angle was. For some reason, his work has been turned into this like mythical thing. And Gann made a lot of mistakes. He was a very hardcore to the right, and he hated Roosevelt, FDR, and he thought that the New Deal was going to destroy the country. And when the Dow Jones was at 386, he said it was never going to trade that high ever again in history. Now it's at what, like 25,000 or something like that. So I guess what I'm trying to say is, if you see something like Gann theory, just do a little research, right? Read his books. You'll see it's nothing like these people say it is now. And it just comes from he in his writings he says things like, when something approaches a prior peak, sell. Right? That's not hard to understand. It's almost like a double top, right? If something gets to a prior high, it's going to run into resistance. So anyway, I guess people just like to believe in this stuff because it just makes it easier for them, I guess. I don't know. I've yet to meet a Gann theorist who actually can make money. All right, so this is just an overview. We'll go through this because you can see it on my site. But again, I don't know if I've seen this before. Well, I mean, I'm sure I have. I just don't remember. But it seems like everything is in an uptrend. So obviously, here's the S&P. So we're getting close to 280, right? You can see 280 where the top's here. 280. I know this doesn't look like much, but this was like pretty much all July. 280 was the top at the beginning of last year. And you can see we're very overbought, all right? So pretty simple. levels that were important resistance were overbought. We've had a big rally. I think we're going to see some consolidation. Here's the tech sector, which is basically 30% of the SPYs. So they're always going to have some kind of similarity. But again, uptrend. I don't know why this arrow is here. I guess I forgot to erase it. Anyway, uptrend. And we're in this zone here, 70 to 72. You can see this was kind of the top here. It was the bottom here, bottom here. So those of you who follow me know that I don't trade these the XLKs specifically because they're too volatile, but you always kind of got to know what's going on with them because they're such a big part of the market. But again, hitting this zone of resistance, overbought. Now, when I say overbought, what do I mean? Well, a lot of this is done by like standard deviations and so forth. And if you look at these Bollinger Bands, is what they call them, right? In theory, these are two standard deviations away. So in theory, 95% of all trading should happen within them. So when you get out of them, you expect reversion, see? Here's oversold. But anyway, again, overbought in the zone of resistance, but not massively overbought, not overbought to the point where I think we're going to have a sell-off. If we were really overbought, I would expect a sell-off. What I'm saying is we're in a zone of resistance, and this is the whole market too, not just tech, and we're overbought to the point where I think things are going to slow down. It's not overbought enough that it's going to revert, at least not yet. And actually, this is bullish because when things get to important levels and they consolidate, then their odds are much better that they'll move ahead than they'll revert. So hopefully we'll see some consolidation in the equity market. And after, an 8-week rally or whatever, of course we're going to see some consolidation. This is kind of interesting. This is the financials. You can see they've been testing this 26 level. I mean, it's hard to see, but that's like over the month. And you can see 26 was important here. It was important here. It's an important level psychologically. So we're watching that. But again, right? Something else is heading up. Usually when I go through these sectors, I always see one sector or something that's going down, but it seems like everything is on its way up. So here's healthcare. And this, this thing continues to uptrend. It's a little bit overbought, but nothing major. Longer term, if this thing keeps rallying, I'd look for resistance around 96 because that was the prior top. Well, like going back to Gann, right? I mean, if Gann was live, he would say, if something approaches a level that was a top 2 times before, sell. All right, now that's not, there's nothing mysterious about that. I would say the same thing. Obviously, there's a lot of sellers at this 96 level. Okay, it could be a big hedge fund. You don't know. There's someone out in this market that says when this thing gets to 96, sell it all. Don't knock it down, just sell it. So it kind of puts a cap on it. But again, in an uptrend, this is the consumer discretionary sector. Okay, you can see real close to where the top was, and I think that was December. So again, something else is in an uptrend, a little bit overbought, testing recent highs. That's a setup for consolidation. Here is the industrials, XLIs, again, uptrend. I mean, I hate to sound like a broken record, but I don't remember too many times where everything was going in one direction. It seems like there's always some sector doing the opposite. So anyway, we're overbought here. Longer term, I'd look for a resistance around 80 if it keeps rallying, because obviously there was a top here, there was a top here. 71 level was important in the past. if we come back down, I'll keep an eye on it. It's probably not as important as it used to be. Here's consumer staples, again in an uptrend, consolidating above this 53.50 level. You can see this level was important here. It was the top here, here. So, you know, overbought, but not extremely overbought. And as you all know, if you listen to me, this is one of my favorite long-term charts to look at. Just look at the importance of this 50 level. On the XLPs here, I mean, this is the entire year of 2015, and it was the top. And then this is September of 2016. This is last, May, and this is recently. So obviously, the 50 level here is important. So if we sell off, obviously, keep an eye on it and show this chart to your friends that are academics or random walkers and ask them why this level is more important than others. In their methods, it shouldn't make a difference. So here are the XLEs, the energy spider. So we correctly identified this bottom when we identified the bottom that happened on Christmas Eve, because you notice this capitulation volume that we talked about. So it rallied, consolidated, and now we're testing this resistance. Okay, 6650, blah, 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 blah. Again, another sector that's on its way up, but running into a little bit of resistance or some headwinds. Here's another long-term chart for your friends that don't believe in quote-unquote technical analysis. By the way, what I do is I call it market equilibrium analysis, because I'm trying to find where the market's in equilibrium. I don't like that term technical analysis because it's too generic. But look at this 78 level, right? You don't need to be a chart guru to see that this level is important. This has been the top since September of 2016, right? So we're talking about 2.5 years. This was the top. And then you can see where the recent bottom was, right? Just a few weeks ago was right where the bottom was in 2016. So again, this is proof that there are certain levels that are more important than others. And we just saw this 6650 level is now kind of being tested. Materials, this is a longer term chart, it's 2 years. Again, you can see uptrend, testing this level. You might see like, oh, gee, Mark, that's a little bit of blah, 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 blah. This is like 54.75. I mean, this is not, don't the scale that chart throw you off. But you can see like 54 was the top here back in 2017. It was a low here. So I don't really trade the XLBs because I just don't think they give enough trading opportunities, at least from my style. But I like to go through all the sectors. And last but not least, here we have utilities, which caught me off guard because I've been working on a project for a client of mine, so I haven't been paying as much attention to this stuff as I should. And I'm surprised with all the emails I get, no one's mentioned this. But look at the action that's going on in the utilities, right? We identified this 52 level because it was a top here. Then it became a bottom here, recent sell-off, bottomed out again. And then look at that. This thing is up 8% in a month. I mean, that's like the type of returns you get on a biotech stock. But it's utilities, up 8%. I mean, the last time utilities acted this well were, gosh, I want to say 3 years ago, maybe in the first part of 2016. I don't know if you remember, but remember all that stuff was going on in, was it Flint, Michigan, or with the water? And so all the water utilities were like skyrocketing. I don't know what ever happened to that, but anyway. All right, so that's it. That's my spiel. Hopefully I didn't annoy you, and I gave you some info that you guys could convert into money. But I guess my two takeaways are this. I expect consolidation because we've had a long rally, we're running into resistance areas, and we're overbought. The other thing I think is strange, well, not that it's strange. The other thing I would like to point out is I don't recall a time, and just because I don't recall doesn't mean it didn't happen, right? There's a lot of things I don't recall. I mean, God, you should ask my wife. That, things I don't recall that allegedly happened. But I don't recall a time where all these 9 sectors were all going up at the same time. And I'm going to be working on that for the next day or 2 or 3 or week maybe, because maybe that's a contrary indicator that we're starting to set up for a sell-off. And as the SPYs are approaching that important level, as they consolidate, the fact that all these sectors are going up may be a sign that after the consolidation, it's going to head lower instead of going higher. So those are the things I think you should look at. That's what I'm looking at. These are not trade recommendations. This is just kind of roadmap. If you trade the SPYs, you should definitely know what all these different sectors are doing. And that's it. Thank you for tuning in. And I look forward to talking to you guys next week. Or, I'm sorry, you people next week. I have a couple of the ladies that listen to the call have said you should stop saying guys all the time. So I'm sorry. I will say all you want to be trading billionaires. So how about that? Is that better? All right. They're telling me time to shut up and get going. All right. Thanks, everybody. Talk to you next week.